Happy virtual Friday, everyone, I guess. It is Thursday, the 18th of April, 2019. Today is the last day of the week. Tomorrow is Good Friday, a holiday across some major markets. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market stance versus yesterday is um, mostly higher. We closed on the indices near the lows yesterday, and we're popping up a little bit. The market actually tested lower overnight, continued yesterday's drop, and has rallied up. We did get some numbers about a half hour ago that were pretty good. Um, we had advanced retail sales came in at 1.6 versus 1% in the US. And we also got initial claims that are 192,000 versus 205,000, the lowest since December of 1969. Um, Reminds me of Brian Adams. And then also we got April Philly Fed, which came in at 8.5 versus 11, a little bit lower. New orders, however, on that came in at 15.7 versus 1.9 prior. Inventories are higher, but overall an okay number. The market, the ES popped up a little bit on that. Again, the market stance is risk slightly on. We started out yesterday with risk on, and it was very apparent, we'll go over that risk was not going to stay on. The leader this morning is the Euro Stoxx 50 up 17 points or 0.5%. The US dollar is popping higher, 43 cents. The bunds are strong this morning despite the rally in the equities, and the DAX follows that. And then comes crude oil. Crude oil again trading June at 64.04, 0.27%. The laggard today is the euro, the cable, and gold. Gold dropped to $1,275. It really kind of slipped right through that 1,300 level and has lost 25 points or so. Anyway, so that's where we stand. And looking at the calendar for today as to what is remaining, really there isn't all that much. We do get market manufacturing PMI 15 minutes after the open, and we get business inventories about a half hour after the open, and we get Fed's Bostic, and these Fed speakers haven't really budged the market at all. Fed's Bostic at 12:10 Eastern. My sense of today, given that it's already spring break here in Chicago, my sense today, and you probably witnessed the light volume until yesterday, my sense today is it's likely to be a get it done early and run kind of day, where traditionally in the pit we would see traders come in, do their business, and then just go for drinks at about 11 o'clock in the morning. This is the kind of day I'm expecting. I'm expecting it to die out pretty quickly. So that's where we are. Again, we get a number 15 minutes after the open, the market manufacturing, composite and services PMIs, and then we get business inventories 30 minutes after the open, and Fed's Bostic at 11:10. Inflation rate for Japan at 7:30 Eastern tonight. Let's take a look at what we expected yesterday in our review segment. I'm going to try to keep this as short as possible. Yesterday, the primary scenario was to drop. And the expectation was the drop would take us back to about 29.12 for a consolidation, a potential for 29.10. That's the MC point of control. That's outlined right here. Remember to set your screen or to set the streaming video to 1080p so you can see the prices and see the detail. This is being broadcast in high definition. You should be able to receive it in high definition. But overall, the 2910 as outlined right there is the point of control for this whole area. So the expectation is we would drift down, but I did expect the market to find a base and pop back up as it's been doing again and again and again. Responsive was the key play here. Even the secondary scenario was looking for a push into 23 or so, 23, 24, and then an impulse down and then a push down into the 2909, 2908 area for a close sideways and back in the range at about 2910. So we got a pseudo scenario 1 and 2 overall. Well, there was a lot of action, so I can't use the tick chart. This is what we got. One thing that was really obvious yesterday from the get-go is the selling. And as I warned in the Convergent community chat room, that buyers beware. The selling yesterday's trade and the open really showed somewhat of a driving behavior. I couldn't tell if it was an open drive or not. But there was quite a bit of selling. And when we look at who was selling on the tape, you'll see this yellow line. This yellow line here is marking lots that have been consolidated back. So all CME breaks up orders and reports the supply side versus the demand side. And what we do here is reassemble those on this feed, assemble all trades that have the same tick ID, and then chart them and split them up. And the split is for large lots, anything above 9 lots. So everything above 9 lots up till 99 contracts is the white line. And that group represents a, a pretty decent chunk of what gets traded. The small lots represent the first standard deviation. This is 70% of all ticks, the size that's going through on all ticks on the delta. And then the very large lot is the third standard deviation. Well, actually, it's 1.6 standard deviations, or almost a little over 90%. And these are basically 100 lots or better. And you can see the 100 lots or better came in selling right off the get-go. Here's the price. These are the prices of the S&P, and you can see price was falling. Price was falling, and very large lots, 100 lots or greater, were selling into the 10 lots to 99 lots, and they were very dominant. This bar chart down here is the overall delta. That's the combined delta. That's the sum of all three lines. But splitting this out tells us what, who is participating and in what direction. And sellers came in, large sellers came in strong right off the open, and there was only a 2-tick test up from the opening print, and that by definition is an opening drive. Now, again, I believe there are a billion ways to trade the market. You could trade the market on so many things. It's insane. It's really a blank canvas, right? So there's no right or wrong way, I don't believe. However, I see people getting led into just taking whatever trade. If the market opens here, then you get short. If it crosses here, you get long. I dissuade you to do that, at least at the beginning, and learn what the auction is about, and determining where we are, knowing where we are opening versus the prior auction gives us a point of reference. It's a first spot. Like if I want to know where I am, if I dropped you in the middle of a salt lake somewhere and there are no reference points, you have no idea where you are. However, if I started the journey somewhere and you know where I started, and I go in a direction and drop you off in the middle of a salt lake, you have an idea of where you were, where you're going, where you were, where you are, and so you can now determine which way you're likely to go. And that's the whole point of this trader bite. And the important part is to determine where are we opening versus the last auction. Remember, we look at RTH really, although I do look at the overnight, we look at the RTH because it's supported by the 500 underlying index stocks. And then we want to look at what quality of open we get. We get an open here that can only go up, even if it's gapped up, and it can only muster up 2 ticks before it rotates down and we see size, pow, hitting the bid, pow, hitting the bid. So immediately we cross off buying. And I can tell you this from long time of experience, 19 years of experience, and really a lot of struggling traders that went through my prop shop that for the most part were successful. A big piece of what we do as traders, and it's very elusive and difficult, a big piece is knowing when not to trade. That's a hard one. It sounds easy. Oh, I just sit on my hands, then I don't trade. Knowing when not to trade is really, really, really important. But also important is knowing which direction to avoid. So, yes, you could make money getting long yesterday, but you'd be looking for three tick scalps and throwing away 4 5 point rotations in the other direction. That's 16 to 20 ticks in this product. So knowing that, hey, I'm going to lay off the longs could save you thousands of dollars a year just by that indication. Hey, the way this is behaving, I'm staying off the longs. I'm not going to take longs. That's how I trade. I see a drive, I say, my job today is simplified. I don't have to think of what areas I need to fade or get long or trade from the outside in or whatever. It becomes very simple. It's door number one, look for a spot to sell. So all of my energy goes into finding in this really tough read yesterday. I'll show you. All of my energy goes into finding a spot to sell. And imagine how much easier it becomes for me, or how much less effort there is for me to now trade. So here's what we got yesterday. We opened, we went up 2 ticks, and we sold right off. Where am I going to sell this thing without experiencing FOMO or selling into a breakdown and keeping my stop way too far? There's not much for me to do here. That alone saves me personally, probably has saved me probably hundreds of thousands of dollars in my career, to identify and stop being stupid about the fact that I need to trade when the market is open, because that's my job, to come in and trade. Instead, I've learned the hard way, the expensive way. I've got to sit back, and also because of the action, I cannot be looking long. I can look long when stuff like this happens, when we hit a key reference area, yesterday's low, so we have a double bottom, so I know that's a weak low, and then we get a pop up, and I know that, hey, it's time for me to participate in the direction of the impulse. So I'm going to look for a short here, which I did, which I narrated yesterday in the chat room. Look for short, and then look for the rotation back to 450, because that's a weak low now with a double bottom with the prior day. And there it is. It takes forever to materialize, but eventually, boom, there it is. You take your scale out at the prior low because you're expecting a breach. You have the IB stat underneath you, 98% probability that one of these yellow lines is going to break today, historical probability. And so I'm gunning for that. And the opportunity was at 29.10 yesterday, and that was the key trade of the day. Anyway, I'm spending a lot of time on this, but I just want to remind you that the reason you're here and the reason you benefit from being here is to really create a much more robust way of looking at the market, as opposed to just looking at it mathematically, which there's nothing wrong with that. It's just that if you understand what the auction is doing and what the narrative is saying, you have a much stronger hand, and you're not relying strictly on an indicator. So if you know somebody who could use that information, send them this way. It's really important to learn that lesson. So yesterday, what did we get? We have a B-shaped profile, okay? We have a B-shaped profile, long liquidation. The market really squeezed and found balance down here in the 29.06 area. It traded pretty well between 29.09 and 29.01 or so. 29.01 or so. It closed. It hit the low was the gap low from last week. it was the gap low from last week, so that gap zone is gone. That was here at 2,950 that we left behind, I think, Friday. That gap is gone, and the close was outside of the initial balance. The initial balance is relatively wide. It's an unusually wide initial balance because of the drive. When we have a drive, the initial balance becomes wide, and because it becomes wide, generally the market doesn't extend too far beyond it. It's the old analogy is if a lamp had a very wide base, it would be hard for it to tip over. If a lamp had a very narrow base, it's easy for it to tip over. A narrow base is a small IB, a wide base is a wide IB. It's hard for the market to continue in that direction, although sometimes it does. So we expected a small extension, but we closed on the low yesterday. So the expectation is for the market to attempt again and push lower. The target below is 28.9475, and it did that and pushed to the next key area, which was 28.90 quarter, pushed through by 3 ticks. This stock zone has been here a long time. And now we're trading up here. We've walked ourselves up this morning. Here's what the order flow looks like, the heat map look like. So if we go back to where we reopened yesterday, this is the close. This is the pit close right here. Oops, it was updating. This is the pit close right here. This is the reopen. Market drifts up a little bit and then just falls. You could see the nice cascading falls, and then a slower cascade, and then finally a rotation that extends higher. So you could see that this is the first strong positive rotation. It is not done, gets one more cascade, and then we get releases in Europe right here, and then we've been climbing with the news at 7:30 Central coming in right here at with the advanced retail sales and the claims and things like that, and we've been hovering near highs. When you look at the overall order flow in the heat map, it's quite noisy overnight. There's a nice block of offers right here, a nice block of liquidity. There's some pretty decent liquidity that's been sitting here all night. Where's that liquidity? At our 2910. Remember, the 2910 was the key selling area yesterday on the pullback. It's also the MC point of control for the region. And there's plenty of liquidity sitting up there, 697 contracts. It is the highest number of contracts in the depth that we see. This is a full depth read. Let me scroll up. This is a full depth read, and you can see that there's quite a bit of liquidity above the market. So I'm expecting this to continue to push the market. The market moves towards liquidity generally, not always. I expect it to squeeze in, but I expect it to stall out. The first opportunity is likely to be a sell in this area, even for a scalp. That's the first opportunity that we're likely to see. So what about the overnight? We reviewed the overnight somewhat. I don't want to dwell on it, but a pretty wide range overnight. Pretty wide range overnight with really strong volume, 268,000 contracts. That's the most we've had this whole week. And really, it looks like a nice taper on the profile, really solid taper as prices went down. There was less and less interest, therefore less and less volume. This is the beauty of volume profiling. And then we held the middle for a while, and now we're extending up and are trading a fair amount of volume into yesterday's point of control. This is a market that seems to have found its legs overnight. I'm expecting it it's not likely to revisit that low of 28.8950 during the day session. Let's get to our current environment. But because there is no Friday, it is virtual Friday. It's a virtual Friday today. Please find that thumbs up and hit it for me. It does help promote the broadcast and bring more people over. Why am I interested in bringing more people over? It's because I'll have an objective to make a difference. And the more people that think in terms of context, just like big traders do, the better for them. So what are we looking at? This looks noisy with a lot of stock zones. These stock zones are a function of my time frame. I'm looking for several opportunities during the range, and therefore I have more stock zones, and there's quite a bit of structure to play off of. What am I looking for today? This morning, looking for this to open. In an open auction, we've got the point of control underneath us. I'm looking for us to squeeze higher, push the overnight high into 29.1150 and into that liquidity. And then I'm looking for it to turn over, consolidate, and retest this low. Finish what we didn't finish yesterday down here, retest this low, and then start to climb back up. It's likely to test down into 94.75 right here. I'm expecting it to climb back up and finish in the range. I'm expecting the dip buyers to step in and take us back up. That's the primary scenario. I'm fairly confident in that scenario. I will be looking for the short on the open. It doesn't mean you should get short on the open, by the way. Follow your plan. I'm simply telling you that that's the most probable. The outcome of every trade is 50-50. It's unknowable, irrefutable, it's consistent. And so bet wisely. Your risk control is the most important part of what we do here. Other than that, I'm looking for a drift down into the prior low, push down, impulse up, and then squeeze into that the liquidity above and start to move back into this 29.10, 29.11 and make an attempt at a run at 29.15 and then hold steady. I'm expecting this to be a pretty boring day. That's the secondary scenario. The first scenario is push higher, run into, collide with all that liquidity that we saw on the on CT Bookmap, and then get offered, sell, rotate down and through the low, and then bounce back up in the 94 area. I'm expecting that to be the range, so I'm looking for 94 to about 29.11 for range today, about 8 to 9 points at the most. That's it. Good luck. I know this was a long one. Don't forget to hit the like button before you head out. Have a wonderful long weekend and enjoy the festivities if you observe. Good luck.